Yeah, so I don't know what. So July 5th. What is that next?
Yeah, that's Monday.
Oh, next Monday, right?
Hmm.
Yeah. So this was supposed to be. So tomorrow would be. Well,
So
yeah,
everything should be turned in then by Monday, because I know I'm behind on a couple of things.
yeah. Well, and another thing,
Okay.
yeah. Now I think I have a few days after the end to get the grades in. I think they give me a week.
Okay.
So I think that I'm a little, before I promise that, I should probably say that, I'll see if we can like make it maybe the ninth to have
Okay.
everything in. But yeah, our last class is Monday, which we don't have. I actually have another class at 6 p.m. on Mondays. But yeah, so it's a strange one. And I double checked on it. I said, is this right? Because this the well, I don't know. This is a harder class than I think most, especially because it's introduction to accounting. It's if it was like your third accounting class, it wouldn't be that bad. But since it's the first one, it's kind of rough. So anyway, yeah. But yeah, so I'll have extra time to put it in. I do wish it was a longer class though, and I actually did ask about it. I don't. And I'm completely honest with you. I don't really understand how the summer sessions go at Roosevelt because there's classes that are 5 weeks. There's classes that are 8 weeks, 9 weeks, and 10 weeks in the summer,
Huh.
and I'm not sure how that all works out. Um, it's kind of odd that there's so many different lengths of class.
Yeah.
I mean, if they're 5 week and 10 week, I'd say okay, that makes sense because either we have two of them in or one, but 8 week and 9 week ones too. So anyway, yeah, so this will be the last that we thing that we go over. And again, well, yeah, I'll check. I would be surprised if they didn't extend the time though, at least a week after the end of the class.
Yeah.
I'll check to make sure.
Okay.
I'll give you guys a more exact answer to that. And okay, I'm not going to complain anymore. But no, but another thing is I haven't found anyone who knows when the grades are due for the different sessions in summer. Because and yeah, okay. My problem, not your problem. All right, so yeah. So anyway, tonight we're going to finish the chapter 6 handout, and we'll do the chapter 6 practice exam. And next class, I'll leave it open for questions, and we can go over and catch up anything that any parts that are still unfamiliar. Um,
So then that means that we didn't go over everything that's on the syllabus then, right? I just want to make
no,
sure I'm
and
not
I
missing
didn't
too
think we would.
much.
The only thing that we didn't go over that I wish we had gotten time for go back up, is the chapter 8. That's the only one that if I had to add one.
Okay.
Well, I was going to take this one out, but I found out that one's in the graduate entrance exam thing. So actually, that's the 1 hour course that I'm teaching in the for 9 weeks in the summer, concurrent with this. The only one that I would be this one, the long-term assets, the uh, depreciation ones. The rest of these I don't think are critical. I would like to put them in. I'd like to get them done, but again, 5 weeks is really short.
It is super short.
Yeah,
Okay.
especially for this class. It's you know. Anyway, we do what we can. So
All right.
um, yeah, so today we're going to do the chapter 6 handout, and we're really just going to do two of the problems out of there,
Hmm.
and then we're going to do the practice exam.
I
And
didn't get the practice exam
I
in
didn't
my
send it
email.
out yet.
Oh, okay.
I will. Though. Well, when we get the we're going to do two problems. So we're going to do and if you I don't know if you got a chance to look at the videos from last time, but the first in first out, last in first out, and so we're going to go over one each of those, and then we will jump into the practice exam. So there are things on this handout that we're not going to get to, but okay. So let's go to number 5 here. And number 5 is first in, first out. And first in, first out really means first in, first sold. And it has to do with the costs. So first in, first out, the out means sold. So when we talk about first in, first out, it's really first in, first sold. So you'll notice down here, the costs are different. You know, some costs are $5, $6, $4. And when you sell something, you got to know what the cost is. So, you know, because you have to know how much to take out of your inventory. So it matters which one you sold. So even though it might be exactly the same, you know, like for instance, we're selling little cars, and you know, if you have a bunch of these little cars in a bin and somebody buys one, and you know, some of you paid $5, some of you paid $6, some of you paid $4, the question is, well, which one is it? You know, because this is going to leave the place. Someone's buying it; they're going to take it with them. You know, so if we you know, they're going to pay us $12 for it, and this is going to leave, but we want to know, did a $5 car leave, did a $6 car leave, or did a $4 car leave? Because it's going to make a difference on our income statement. Okay. So sales are usually very easy because whatever you sold, whatever they gave you back, that's as you count as a sale. So if you sold 300 units at $12 each, so okay, so we sold 300 units times $12 each. And that is okay.
36,000.
3,600, isn't it?
I'm at 3,600. My apologies.
Yeah, so this will be our sales. So sales 3,600, and again, that's usually, the sales are usually pretty easy to figure out. Whatever you gave up, or excuse, whatever they gave you for whatever it was, that's your sales. Now, the cost of goods sold is that, okay, well, we sold these 300 units. So, just kind of show what we did in the other one here. You're going to need the cost of however many units you sold. So we need the cost of, so copy this just so it's the same coming down here. Oops, that's 300 units. Okay, so this is cost of goods sold. So we have to figure out, you know, we sold these 300 things. We have to figure out which are the cost. And some of them cost 5, some cost 6, some cost 4. So the question is, which ones did we sell? Okay, first in, first out is really the first in, first sold. So right here, these are the first ones in. I guess we're going to do that here. So the first ones in were these ones on 1-1. Okay, so coming down here, let me do something here. Okay. So we're going to need the first ones from the beginning inventory. So we will take, well, we'll take all 120 of them. So over here, we'll have units. So we found the cost of 120 of them. And the cost of those was $5. I'll multiply them out later. Okay, so how many do we still need to find the cost for? So we need to find the cost for
280.
Close.
Oh gosh, we need. Oh, I'm sorry, 180.
Yep. So we still have 180 units that we need to find the cost for. Now, this layer is gone. So these are gone. They're gone forever. Oops. All right. Oops, that's nice one gone. And the reason I say they're gone forever is that they're never coming back. These are completely gone. So they're completely sold. You know, these, whatever, these, you know, the cars have left the place. So 120 of them are gone. They're not coming back. They're not in the books ever again. Okay, so we need to find this. So this first layer is gone. So the second one, we go down to the next first layer. The next first one here is 260 at 6. Now we don't need all 260. We only need 180. So we are going to take 180. Spacing here isn't as good as it was yesterday. Okay, so we have our purchase of 19. Now again, we aren't gonna take all 260. We're only gonna take 180. That's all we need to find the cost for. All right, so we'll take 180. Those are at 6. And this will look a little strange, but the mean cost for it is 0 units because we found the cost for all the ones we sold. And you'll notice that, you know, let me zoom in a little bit here. Oops. So, you know, this 300 units we sold, we had to find the cost for those 300 units. You know, so this has to equal 300. So if we sold 300, we have got to find the cost for 300 of them. And we multiply those out. 20 by 5, what is that, 600? So 80 times 6. Oops. Okay, so that's our cost of goods sold. So coming down here to find our gross profit, in other words, what do we make on just the items we sold? So we'll have sales revenue. It could be sales or revenue. I just put them both in there because they're the same thing. So we got 3,600, but the cost of goods sold. No, I should probably put it negative here. They're kind of like expenses, except dollars going out, they're goods going out. And this will give us our gross profit. That's not how you spell it. 3,600 minus that is some number. 1920. So that's how much profit we made on those. Goods. So this 1,680, those are the assets that left the place. We have a car here that I sold it. The car goes. That's in each one of those cars is one of these leaving the place. So we don't have this asset on the books anymore. This inventory of this car. This inventory is gone. We sold it. Now we wanted to sell it. That's a good thing it's sold. But so this 3,600. The cost of those things we sold was 1,680. So how much do we make on just the sales of that? Is that we made $1,920 on the sales. Okay, ending inventory. I'm going to move this whole thing down. You don't have to do this. I'm just doing it to keep it on the same screen. Okay, now we got to do a little bit of adjusting here because we purchased inventory on, oops. So we sold 120 units, that's gone. The inventory on 1.9, we sold 180 of those. So we sold 180 of those. So this down here is okay, so 260 minus 80, what is that? It's 80, right? I better do the math here. So 260 minus 180, 80. Okay, so this is what's left in our ending inventory. This beginning inventory is gone. the 260 that we had, we sold 80 of it, so there's 80 left. So this will be our ending inventory. And we didn't sell any of the ones on the 15th. We bought on the 15th. Okay, so I think that should be math right. So the ending inventory would be 680. And the ending inventory, this is what is not sold. You know, these are the things that we did not sell. If they were sold, they wouldn't be in our inventory. So these are things that were not sold. So these are the things that were sold. This is the cost of what we sold. Let me draw an arrow here. So the ending, so there was still 80 not sold from that layer, and then there's 50 not sold from the layer we never got to. Yeah. Okay. Let's go to number 8. Okay, same thing. Except this is last in, first out, or last in, first sold. Okay, and this one is kind of a wacky one. Yeah, we talked about it last time, but okay, so last in, first out. First off, first in, first out is probably the way most things are sold. You buy something, if you buy something on the first day of the month, well, it probably came out at the beginning inventory, right? Because it was that was all you had as a beginning inventory. So first in, first out is probably the actual logistics of how things are sold. You know, the actual pattern of the first ones that come in, those are the first ones you sell. Right, and this time, you know, the first one's in and the first one's out. Lifo says that the last one's in are the first one's out. Now, the Lifo method is not the way things are usually sold. You usually don't sell the last ones in. In fact, it'd be, you know, let's go back to the, where am I at? Share my screen here. You know, if you go back to if some of these sales were made on January 1st, well, they couldn't have come from the 15th. The 15th hasn't happened yet. You didn't even have these things in the place on the 15th. So last in, first out, as far as the actual flow of goods, is not a very good, it doesn't match up. For the most part, that isn't how things are sold usually. Now, why do we have it? Why do we have last in, first out, or last in, first sold? We have it because theoretically, the most accurate number is the last one that's purchased. This, if you talk to people who are into economics, they'll say, look, the last number is the best number. That's the most current number. That's the number that makes sense to most people who are looking at the financial statements because it's the most current number as far as what those goods cost. So that's the number you should use. So the Lifo method is a theoretical one. It says, okay, to have the most accurate income, we need the latest cost. And the Lifo method gives us the latest cost. We assume that the last ones in are the first ones sold. These are the most current costs. So it's kind of an odd duck. It's such an odd duck that the United States is the only country on the planet that uses it. No other place allows you to use Lifo. They say, well, inventory doesn't behave that way, but in the United States we use it, and we use it a lot. There's a lot of companies that use Lifo. It's probably the most used inventory method there is, Lifo, in the United States. It's also used for taxes a lot. Okay, so again, it's not the way that goods flow. It's a theoretical one that gives us the latest, best estimate of the value of the inventory that is sold. So it gives us the best estimate of the income. You know, whatever the income is, that is the latest numbers are in the income. We're not using numbers that were from, you know, periods in the past and so forth. Okay, everything else is exactly the same. I mean, the workings of it, the mechanical workings of how we do this is exactly the same as FIFO, but instead of starting up here, we start down here, that these are the last in. So everything else is the same. It's just that we start down here instead of the first in. Start with the last in. Okay, sales doesn't have any impact on sales at all. So, oops. I got a little fly buzzing around me down here. I don't want to swat him. I just want him to leave. Oops, net cross, this will be price. Okay, so sold 300 units. Sold at $12. You'll notice that this is exactly the same numbers we had before. And so it does not change the sales. Lifo and FIFO has nothing to do with the sales. The sales are whatever they handed you. You know, when you gave them the goods, whatever they handed you back, that's the sales. Okay, so So sales revenue, build that. Okay. Cost of goods sold. Okay, we sold 300 units, so we need a cost for 300 units. Wait a minute, where did I get that from? Oh, I don't know. I didn't go all the way back. Never mind. La, 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 la. Okay, so we sold 300 units. Okay, so where do we go to first? Well, we go to the last ones in. So these are the ones we're going to go to. So on 115, we bought 50 of those units. So we're going to assume that those are the ones. Okay, so we're going to take all 50 of those. $4 each. All right. So notice that these are gone. We sold that entire layer. It's gone, never coming back. So that layer is gone forever. We will not have any more units coming out of the 115 layer. It's completely sold out. There's nothing you can do to bring it back. Okay, so we need cost for. We need to turn off caps. We need. $250. Okay, so where will we go to next? We'll go to the purchase of inventory on 1.9. Now we don't need 260. So 260 is too much, but we can get all of our 250 from that layer. We still need 250, so we'll take the 250 we need. Okay, and oops. And so we don't need the cost for any more units. We got all of the units we need. So I was asking me, do we need to put this in here? No, we don't. I put it in because I wanted to. Okay, so 50 times 4 is 200. $250 times 6 is what, 1,500? And so those together 1700. Okay. So our gross profit is how much we make on it. So 3,600 minus 1,700. That's how much profit we made on just selling those goods. And again, that's the cost of the goods that left the place. So whatever we paid for them, that's what we're going to. And again, we're going to assume that the last ones in were the ones that we. That should not be a 5. That should be a 15. The last ones in were the ones that we sold first. Again, we really didn't do it that way, but theoretically, the economics people will tell us that those are the best indicators of profitability. Okay, so $3,600 came in. What went out? And by the way, sometimes you'll see cost of goods sold called COGS. So I think I told you guys before. One of my first jobs was working for Navistar, and I was at an engine plant. They kept talking about COGS. Now, engines do use COGS, so it wasn't that it was that strange. But I didn't know what they were talking about, and then it hit me. Okay, this is cost of goods sold, and so this would be the gross profit. 1900. Yes, 3,600. Yeah. Okay. So this will be the gross profit. Okay, ending inventory. Well, we got the same problems we did before, kind of, for this. Is that move it down the page here, just kind of get it out in the same area. Okay. Well, recall that we sold 250 units out of this inventory. So we really only have, what, 10 left? So this is our ending inventory. We still have these. Oops. And we still have these. All the rest of this is gone. So 250 of this is gone, and this entire layer is gone. So the only inventory from the 9th we got is we sold 250 of them, so we only have 10 left. Okay, so ending inventory. And again, this is what was not sold. Now, this is the inventory that was not sold. So we didn't sell the 120 from the beginning inventory. And we didn't sell 10 of the so our ending inventory is 660. Okay, so the figuring out which cost to use it can have an impact on your income. You'll notice that page 8 and page, or probably 8 and problem 5 are exactly the same. They have the same cost, they have the same sales, they have everything the same. It's just they use a different method. And you'll notice that for FIFO, on page 5, we had income of 1920. Going down to number 8, we had income of 1900 even. So it can change your profit. Also change your ending inventory. We have 660 on page, on this page, on number 8. And on number 5, we had, 680, I think it was. So it can change your ending inventory. Also, it will change your ending inventory if the prices change. If the prices are exactly the same, it won't have any impact on any of it. It doesn't matter what. If these were all, $5 each, it wouldn't matter what layer you went from. But because they fluctuate, it can. There's an old tired accounting joke that they say is someone asks how much does something cost, how much do these units cost, and the accountant says how much do you want them to cost, because there are different methods and they'll give you different numbers. But anyway, that if we use Lifo or FIFO, and these are the two that we use mostly in the United States, are Lifo and Fifo. Those two are the ones that we usually concentrate on. And quite honestly, a lot of people use Lifo. Lifo is I don't know if it still is. It used to be the most popular inventory method in the United States, and a lot of companies use it on their taxes. Since prices usually rise, the Lifo method usually has the lowest income, which if you're doing your taxes, you want to have low income. Notice that, as far as the actual selling of the inventory and the people, people selling it and all that, it has nothing to do with that. This is simply applying those numbers, allocating those numbers to it. Another quirky thing about LIFO, and it goes to this beginning inventory. It's possible, if you're using the LIFO method for many years, that you never actually get down to this inventory. You never actually get completely down to the beginning inventory, whatever it was. Unless you sell out the entire store, you never get down to the beginning inventory. So theoretically, you could have inventory that's 100 years old on your balance sheet. You could be a steel company with prices of steel from 1928 on your books if you're using the LIFO method. Nickel a ton or whatever. So, and that's one of the reasons why I think that most other countries don't like this method, is that the beginning inventory can over time become a completely ridiculous number because of inflation and so forth. That companies that last for 50 years, they'll have 50-year-old numbers on their books that have no relevance to today. The income will be more accurate, but the actual inventory on the books, on the balance sheet, won't be. Question on that? Okay. Well, let me send you guys the practice exam. Now, the practice exam is just going to be on the Lifo Fifo method. If you look at the handout, there's other things in there. There's the average cost. The average cost is a fairly recent addition because we didn't have computers. 50 years ago, they didn't have computers, which is kind of amazing. But they didn't have, and they really didn't have too many calculators either. I mean, calculators really didn't come into vogue until, late 60s, 1960s. So, in many people's lifetime, I mean, it went from, and we had adding machines. You could add stuff, but you couldn't divide and you couldn't multiply. 120 times 40, you couldn't do that on an adding machine. You could, add, 40, 120 times, or you could add 120, 40 times or something, but they didn't do multiplication. So it's very recent. But average cost is actually, and if you do computer programming, average cost is the easiest because you just throw all the cost and, divide all the cost by the units and it comes out to one number. And whenever you purchase inventory, it just updates it automatically. It's one of those weird things that on the computer, this is by far the easiest method. If you don't have a computer, this is by far the hardest method. Okay, so let me go ahead and send you guys the thing here. I'm gonna stop sharing for a second here. I don't like sharing anyways. All right. Let me see. Okay. Okay, hopefully. Let me see here. You should have got an email. If you haven't, I'm going to go ahead and put it into. Okay, so hopefully. All right, so this is the practice exam. And you'll notice I kind of left it open. 2016. That's when I was born. So this is a practice exam, and it's basically the same as we've done before. It's just this is not set up so nicely. But basically, for the sales, you are going to add them up. So these would be the total sales. Let me get that underline out of there. So you sold 230 units. And it depends on which method you're using. Now, it doesn't ask for, and this is what you commonly see, you'll say, well, what's the selling price? What do we sell? A lot of times in these problems, they don't ask you for that. Why? Because it's too easy. It's too simple. So a lot of times they don't ask you what the sales are. I mean, I threw it in there because I want you to get the kind of full picture, but it's not really a part of finding the cost of it. So you sold 230 units, and you have to find the cost for 230 units. And so the question is, where do you go to from here? Okay, so okay. Let me use tabs. All right, so we got our cost of goods sold. We need to find the cost for these 230 units. We sold them. It doesn't say what price we sold them for. We don't really need it for this. But we need to find the cost. And so we have to go to the first in. Because this is the FIFO method. First in, first out. And by the way, you'll often see it listed as that. It won't actually write out first in, first out. It'll be FIFO. You look through the tax code, it'll say FIFO, and it'll assume that you know that. So it's good to get used to just looking at the FIFO, LIFO acronym and knowing what that is. Okay, so first one's in, we're right here. What happened? My inept formatting aside, these are the first ones in. So those are the first ones we're going to take. Now notice those are gone. They're gone forever. Okay, so we still need the cost for let's do 30 minus 80. 150. Okay, so let me go over this. Whatever. Okay, so then we'll go to the next layer. We have January. Purchase of 100 units. We will take all of those, so those are gone also. So wacky. What the heck? It's not letting me get rid of the underline here. Okay. I apologize for the formatting on this. I'm not sure why it's doing that. So 28. Equals, I'll figure this out later. Okay, so we still need the cost for 50 units. And so we can get 50 out of this last one, so 90 at 32. So and again, we don't need all 90, we only need 50 of those. Okay, and that was at what, $32 each. All right. Well, hopefully. So 80 times 25. Excuse me. I must be doing something here. All right. 100 times 28 is 2,800. Too many of those. 50 times 32 is what, 1,600? And so all those together add up to so our cost of goods sold would be 6,400. Okay, I'm going to copy this all the way down to here. Now from January, we sold got ahead of myself. 40 or 50, so we have left 40. $12.80. Okay. So that's that one. You want to try this one on your own? I'll give you a few minutes to try this one on your own. I'm not sure why I have these reversed, but the the inventory is second here. Okay, so let's see. Those are sold. Oh, this is wrong. Well, hold on, hold on. Okay. Okay, so make sure you don't. Yeah, what I had up here before. So this would be 1,000. I had 1,250 on my phone, which was wrong. Okay. Okay, so that is the practice test. And again, it's a little bit different format, but it's actually a little bit quicker. Or, well, you don't have to deal with the those sales. So anyway, I will be sending out the exam for chapter 6. I'll make it due. I'll make it due next. Well, technically, the last day of class is the 5th, so I'll make it due on the 5th. And let me check. I can probably take stuff in during that next week up through the 9th. I would be very surprised if they didn't have at least that leeway in there. But it could be a little different because it's summer. But I'll check on that just to make sure. Tomorrow night, I will be here for class. There was nothing planned. There's no new material will be shown. If you have any questions about anything, that would be the time to ask it. But if you run into trouble too, you can always text me or email me, and we can set up a time for a Zoom meeting or however you want to do it. So don't be shy. It's not. There's no. You won't be bothering me at all. So anyway, next class I'll be here at 6 o'clock. It's not required, but if you have any questions, I'll certainly be here to answer them. So I'll be sending out the chapter 6 exam shortly, probably within the next hour or so. Any questions?
No, thank you.
Okay, well, have a, if I don't see you guys again, have a good quarter, and hopefully I'll see you in the future. But okay, and again, I'll be here tomorrow night, same time.
Thank you.
Good night.
Good night.